G'day traders, Mindset Reset. Today we're talking about high performance trading process, harnessing the power of a high performance trading process. The process is what enables you to have a routine each day to manage yourself, manage your emotions, manage your headspace around treating trading like a business, but also managing your physical energy, your emotional, mental state, creating a workspace that supports and nourishes that in terms of the environment that you're trading in. Having a routine that helps you identify the best candidates, the best instruments that potentially will morph into a best trading setup once the session starts. Having a process is first and foremost the playbook, the best trading setups. It's about filtering out garbage and over time recognizing what a garbage setup is, or if it doesn't evolve into a setup. If an instrument comes up as a candidate, does it behave, does price behave as it should when we get to the equity market open, the 9:30 New York open, 9 o'clock, second hour, whenever that trade opportunity presents. But also having a process in terms of managing your risk, extracting profits, growing your trading account in size. Today was a fantastic example of markets that gave huge moves. Indexes, oil obviously gave a great collapse rate from 3 levels of rise in that beginning of the second hour, but also a parabolic reversal, which was an identical trade setup to yesterday's low of day. I talked about on page 107 in the playbook, the average stop on is 25 to 50 pips outside of the range. So when you start to understand the high and low of the day, those are often reversal trades. There are moves inside, as I talk about, that are usually the parabolic move to either break out or hit stops or trigger breakouts. A process to understand when to walk away, locking in cash, and when to hold on. What trades do you want to hold on to? Yesterday we had gold was an all-in day right to the end of the session. Today the NASDAQ is probably going to be, I'm thinking, I haven't looked, but it could be an all-day fade where it just stays down low. Trapping traders trying to counter chart it. It may reverse tomorrow on Free Cash Friday. Huge parabolic reversals on the indexes, a short squeeze on DJ30. But the process is this. The process is taking everything that works for you. So I like to keep repeating certain things because repetition is the mother of all learning. And understanding that trading setups are 90-10. Best trading setups are 90-10. That means we filter out the garbage. That's what the process and the playbook are about. So when traders are taking low quality setups, and I ask this question all the time, what made you choose that instrument as opposed to another one that was clean and simple? I put the scanner up today on TradingView. TradingView is just it's a free scanner, Forex scanner. You can look at minor and major pairs. I tend to just look at the major pairs. It's simpler. It's a smaller list. And I just go through and see what's moved 3-4% on the day in either direction. And then I can look at some of the cross pairs. And what that tells me is a market that's from the closing price of yesterday. Roughly, I'm 5 p.m. New York. Everything's New York time. So a lot of traders are messaging me, what can you change the time of your charts and everything else? I'm not changing anything. It's if you go look at Google or look at your clock, put a clock on your desk that is New York time. It's just New York time. That's it. I'm not changing my charts and everything else. And it's just, I go by the clock. I know what time it is. It's 9:30. So when you use that scanner, that's just giving me an idea to go and look at some pairs to see if they've moved 3 levels or 2.5-3% away from the closing price. And how has it moved? Has it moved up in a pump and dump scenario? Look at the New Zealand dollar on Tuesday, Aussie dollar Tuesday. They were brilliant day 2, vertical 3-level pushes from the closing price into the London session for collapse off the numbers in the US window. Low-hanging fruit, no major red news. Again, just a simple, clean, no stress, zero heat, easy free cash trade. whether it's 25, 50, or 100, whatever instrument you're trading. But if it's free cash, if you're struggling, stick with some major pairs and just look for simple setups. Which is why I put the Japanese yen up there today. It had moved 3 levels from London and took out the high day as we got into the New York Open at the next number level. I believe it was 75. It might have been double zeros, I can't remember. Which took traders in that first hour up into the high of the day, straight up. It just kept continuing, which is the dead giveaway for the easy 25 pip free cash collapse. No major red news. Those are free cash, simple trades. So if you're struggling, stick with some really simple stuff, not just something that's moved. Make sure, again, the timings, the levels, the behavior of price. I want to get in at the number level. There was a beautiful little pin hammer on the 15-minute chart after the peak formation that just pinned up there right at the New York Open for an easy collapse, 25 pips straight down. The process is about just targeting high probability / possibility opportunities, taking those repeatedly, and then you're going to get your big 5-star. Like today, the NASDAQ, I did not expect that whatsoever, which gave me more confidence to hit the DJ30 at the beginning of the new hour after the 1-minute blow off, 3 levels outside of the range. And the reason why is the S&P and the NASDAQ both were collapsing. And the DJ30 went vertical for 1 hour, straight up. So 9:30, and then vertical straight from there, short squeeze. No major red news, nothing to cause that. So the close of the hour gave me a entry on the small time frame, very low risk because I'm selling up at the high. If it was against fundamental news or something, that's entirely different. Like yesterday, we saw the markets explode on news on gold. We don't want to counter trend a market now that's driven on a fundamental release. No releases today. 2 other indexes collapsing. That was an easy collapse right back down. Now I just took it back to the high of the day, left a small little peanut in there to keep going, and that kept going all the way down to the low of the day. But the process is being able to filter out weak pairs, look garbage setups, and just looking for simple templates. Often even just on an average day, most major pairs will give a very clean 25 pip move if you're patient and you wait for it to either give you a reversal trade or a low-hanging fruit continuation. Now, we don't know until price gets there. It's either going to continue to the next level or it's going to pull back and work into the existing trend to give a low-hanging fruit continuation trade, or it's inside of peak formation highs and lows and it's just a garbage, messy market trapping traders inside. But today was a monster day. We've had some big moves this last week again. I said this last week, I'm completely surprised, but you need to be able to just expect the unexpected and roll with it and trade. Like gold today was textbook. First hour put in a high and a low. They took it back into the low of the day, 25 pips outside of the low of the day range. Most stop hunts are 25 to 50 pips, page 107 in the playbook. For a short squeeze parabolic back to the high of the day for 50 pips. Zero stress, zero heat for traders that took that. After that, I can't tell you what happens. I know some traders like to hang around longer and trade other moves, other highs and lows. I don't honestly know what to do after that. I'm looking at moves that build into that New York Open time frame, 9:30 to 10:30, 10 to 11 type of situations, depending on if there's news on the calendar or not. But today was a textbook perfect day. First hour news. After that, we trade and we let the market set up. Like Jim Rogers says, wait till the easy money is laying over there on the floor in the corner, and all you have to do is walk over, bend down, and pick it up. So just to answer a couple of quick questions, how did I overcome a lot of self-sabotaging bad behavior? And I often talk about this. Building the process, building a playbook, figuring out days, obviously, that it's easy to make money on, and trying to only focus on those types of setups. And that takes some time. It took some learning, timings, levels, behavior of price. It took a lot of self-sabotaging traumatic experiences to work through bad behavior, greed, hope, fear, over trading, over leveraging. Over leveraging was probably the number one thing that caused me to blow out in several occasions. That and impulsive trading combined is a recipe for blown accounts, big ones, big blown accounts. So when you step back and start letting things just evolve, the setups become clearer and clearer and clearer. And if, as I've mentioned to traders, sticking to the New York Open, forget about news, forget about first bounce, forget about first bar, forget about everything, and just focus on clean, simple chart setups that are well engineered. The timings, high of day, low of day. That's really the most important thing. Traders who have not got the consistency or the track record, again, should just focus on the simplest 3 levels, 3 sessions. They're in every session. If you're trading London, focus on pound pairs, pound euro pairs, euro yen, pound yen. Pound yen and euro yen are so highly consistent for London session trade opportunities, and sometimes Asia, depending on front side, backside. Same with the pound. You're not going to get one every single day, but there's some very simple, clean setups in London on those cross pairs. Asia, I look at the cross pairs, Asian cross pairs, New Zealand, Aussie, and yen. And again, I'm only looking for maybe 1 or 2 really great parabolic opportunities in a week out of that session, if indeed it presents. And sometimes it may be a day 3, a Wednesday, or a day 3, just a blow-off move that's 50 pips. They could reverse and go back in the other direction that day, but the Asian trade is a blow-off. That puts in a peak formation or triggers breakouts and begins the march back up, and it can be trap volume for a new day 1, day 2, day 3 count. So there's a lot of simple, fantastic opportunities. The most important thing, though, is sitting on your hands and waiting for the market to set up. Those scanners, markets that have broken out of a daily high or low, if it's at a weekly level. We saw that in the Canadian dollar yesterday. So again, I like to compare the US, yen, Swiss, and Canadian dollar to look at the templates of those 3 and look for one ideal pair. If I'm going to trade one, Aussie, New Zealand. Aussie, New Zealand, euro, and pound will be very similar in terms of their chart makeup. Different variations of similar chart makeup, and they reflect to some degree the movement of gold, but just not the same volatility. So sometimes I'll look at those pairs to see if they've already moved, or if gold's setting up, or if gold's moved, to look at the currencies have moved, because there may be low-hanging fruit setting up on the major pairs. But it's if you don't see something that's simple, stepping back and just managing yourself, not feeling like you need to chase something. So I always commend traders who say, I didn't trade today, I just didn't feel like I saw a best trade setup. There's nothing wrong with that, ever. There is nothing wrong with ever stepping back. Like today's trades, yesterday's trades, there was trades in oil, there was trades in gold, there was trade before the news on gold, right into the New York Open, 50 pips. Manage yourself. The trades aren't going away. They're going to be there. You can continuously grow these trading account just with these trades. They're simple trades. When you get a 5-star opportunity, when other time frames are driving it, question again, what do you mean by other time frames? Well, if you're not sure about a trade setup, put your hourly or your 4-hour chart up, and if you want to go short, look to see if those charts are already rolled over or they're already moving, or if you're at the high or low of a day and you're looking at a reversal. That's where the time frame comes in, because a new hour, especially on gold indexes and oil, they start 1 hour later. Their 4-hour chart starts later. Now, I know traders tell me that TradingView, their 4-hour charts are the same. Well, I beg to differ in a lot of cases, because they open 1 hour later, so their 4-hour chart can't be the same. It's an hour later. There's a 1 hour gap between 5 p.m. and 6 p.m. New York time on those instruments. So, and again, whether or not, if there's an entry, there's an entry. If there's a best trade setup behavior of price, 3 pushes, whatever, I'm going to hit the trade. If it's confirming and it's going to be a 5-star or 3-level trade, maybe we're going to add into that. But most importantly, being patient. Honestly, today, in the last couple of days, I've had some traders, they're still struggling. You have to step back. You have to step back. The trades are there every single day. Even just taking one simple, flawlessly executed trade setup, taking what the market gives you, 25, 50, 40, whatever you get out of that trade. I like to preset my profit targets to make sure it takes me out, not so I'm sitting there trying to get out or guessing or second guessing. And it takes me out. I might leave a trailer in, but I have preset levels that just take me out. Even if it pins through, I'm out of the market with profits. And then reassessing, looking at maybe, was there a better instrument? Like today, I think NASDAQ was the best one for sure. I mean, obviously DJ30 was a complete collapse from the high, but NASDAQ was an all-in 300% range expansion straight down. No heat, zero heat. S&P breakout pullback, continuation. DJ30, a short squeeze vertical capitulation through the high. New hour collapse straight down. No pullback, nothing. Almost mind-boggling just to see markets. They're amazing to watch. Like when they behave, they defy all logic, which is what they're supposed to do, because traders can't understand why. It's because they lift the offers and they pull the bids. When they pull the bids out of the market, it's going to keep falling. If they're profit taking, or they're getting other market orders into the market for a little bit of pullback before they pull the bids out again and the market collapses, because they have an agenda. They're going back to get the money. A vertical move on Wednesday, a vertical collapse on Thursday. So anyways, that's my little spiel today. Keep refining your process about managing yourself, your routine for instrument selection, how you're going to select 2 or 3 best trade candidates, how they're going to behave, maybe a side list, just a quick glance as we're heading into that second hour prior to the New York Open. Being able to filter out garbage markets that are just not maybe setting up as they should, then narrowing it down to 2 or 3, and then having an if this, then that scenario, and being prepared to have a starter. If it's behaving properly, to add in, where are the levels? An excellent question today on that first short on the S&P was, where are my take profit levels? My first target on that trade was the breakout traders from yesterday's US session on the news. They broke through the high. That level is a breakout level where breakout traders, first minute, first bar trades were in on the news. That's a level where there's easy money that they're going to go to straight away. So out of the market, pulls back, resumes the trend. DJ30, first hour closes. First target was the breakout area, the high of the day. The next level is the long entry on the short squeeze. The next level is the low of the day, because they don't just go back sometimes and get somebody. They go back and put 25, 50, maybe 150 pips into traders that were the first mouse into that trade, who are holding on, who didn't take profits, who didn't lock anything in. They got the popcorn trade, the around the world trade. So anyways, traders, put another video out later today. We're going to talk about the process, instrument selection, and then best candidates, and just going back and reviewing some simple setups, that understanding 3% away from the closing price. Obviously indexes, it's going to be a bit bigger. Gold, same thing, but they're still around that 3-4% mark when we have a potential for a reversal or a trend continuation trade. Get out and enjoy your day. Just had a fantastic workout. Still digesting free cash Thursday. It was well, it's a big day for a lot of traders. Easy money. Back the truck up. Have a great day, traders. Appreciate you. 1% better every single day, and may the markets go with you.